Welcome back, everyone. Today, we're diving deep into the latest updates and expectations for SoFi. We'll explore key factors that could introduce volatility in the coming week and break down everything else you need to stay informed.
Hello, everyone.
Welcome to Daily Stock Update.
If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting with this week, we have two critical data points to monitor, both related to consumer metrics. On Wednesday, we're looking at the AP non-farm employment report with a forecast of 175,000. Then, on Friday, we'll see the payroll data. Historically, these indicators have shown strong consumer activity, reflecting robust earning and spending patterns. Such positive consumer data could directly impact SoFi in a favorable way. This week is expected to be driven more by technical indicators than by new company-specific news. The Fear and Greed Index is at 48, indicating a balanced risk appetite among investors, stabilizing from the previous week. However, recent developments could potentially disrupt this balance, which we'll discuss shortly. Currently, there's no significant news from SoFi itself. No new SEC filings, no participation in major conferences. It's all about the broader market and key data points influencing SoFi this week. Plus, as always, market manipulation might play its part. On Friday, shorts returned 133 million shares. In a previous video, I mentioned that shorts didn't need to act, which might have been misunderstood. When SoFi's price was around $7, shorts were actively increasing their positions, evident from intraday data. However, broader market trends pulled SoFi back, allowing shorts to ride the negative momentum and return shares. Looking ahead to this week, the open interest for June 7th shows significant levels at $7, $7.50, and $8 strike prices 17, 12,000, and 11,000 contracts, respectively. Typically, the first trading day of the week sees a bump of about 30–40% in the closest strike price, creating strong resistance walls. But here's where things get really interesting. Just 2 hours ago, Roaring Kitty aka Keith Gill made a notable post. For those unfamiliar, he was a key figure in the GameStop saga. He revealed holding $65 million in calls for GameStop with a June 21, 2024 expiry and a $20 strike price, signaling a massive bullish bet. You might wonder why we're talking about GameStop in a SoFi video. Well, historically, Roaring Kitty's moves have influenced other heavily shorted stocks, including SoFi. Back in mid-May, when he became active again, SoFi saw one of its most significant runs. With Roaring Kitty back in the spotlight, it's plausible that shorts are now on edge, potentially leading to a squeeze. While this video focuses on technicals and fundamentals, these recent developments could introduce a new dynamic, possibly leading to shorts covering their positions across the board to mitigate risks. Let's examine the technical aspects. SoFi is currently priced around $6.90. Strong support is observed at $6.79, which has held firm over the last two trading days, Thursday and Friday. The next resistance level is $6.99, closely tied to options activity around the $7 mark. Based on these observations and the current chart, SoFi appears very oversold according to the stochastic indicator. Retail investors have been relatively inactive, likely awaiting external catalysts such as potential rate cuts. Recent updates indicate an increased likelihood of rate cuts by September 18th, with a 64% chance of at least a 50 basis point cut and a 45.7% chance for a 25 basis point cut, up from previous estimates. This growing optimism in the broader market could benefit SoFi significantly. In conclusion, this week holds promise for SoFi, influenced by key consumer data points, technical indicators, and external factors like Roaring Kitty's resurgence. Whether you're buying, holding, or considering selling, make sure to do your own due diligence and consider all these aspects. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.